Hi there, I'm Tyler Ballhorn, and this is the Stockscores Market Minutes for December 23rd, 2013. This will be the last Market Minutes of 2013. We'll see you again in the new year. This week's topic, the weekly scan for opportunity. You can look for abnormal activity on weekly charts, and provided that abnormal activity is out of a predictive chart pattern, you have found stocks that have good potential for long-term upward trends. Using the Stockscores market scan, you can find these strong stocks of the week and then inspect the weekly charts to find the best price patterns. I will show you how to do that in just a moment, but remember to be selective and patient. You only need to find 10 good stocks a year to beat the market and be successful. Now, when I do this scan every Friday, I look for stocks that are making a gain of greater than 50% over the last 10 days, with a sentiment stock score greater than 55. I add in some other filters. I may only want to look at stocks under $20. I may only want to look at stocks on the Canadian market, on the US markets. Typically, if I'm looking at the Canadian markets, I look for at least 250 trades a day. On the US market, I'll look for 1,000 trades a day. Some of you may have an interest in dividend-paying stocks. You can select that as well, and also select an actual yield. If you only want stocks that yield, say, 3% or more, you can limit your search to that. I'm going to show you now on the market scan how we set this up. If you have a advanced or pro membership to Stockscores, you can go to Tools, select Market Scan, and here you can build your scan. So let's do an all-American market scan. And as I said, sentiment stock score greater than 55. That'll look for stocks that have generally an optimistic chart pattern. That's what that stock score filter will do for you. Gain loss greater than 5%. Now, if you're looking at larger cap stocks, you may want to set that to 3% over the last 10 days. I think 5% is good for stocks under $25. So we can say here, let's look for stocks under $25. Number of trades is an important filter to use. Otherwise, you get stocks that aren't very liquid. So I'm going to set that to 1,000 and then run the scan. It goes for every stock that trades in the US exchanges, and it will find for me the stocks that meet the basic criteria of the scan. Now you can see that I found over 100, and that's really too many. I could narrow my search by adding more filters. Now, one thing that we should have done before we did this scan is set our default chart time frame to weekly. To do that, just open up any old stock symbol, type a symbol up in the top right-hand corner. I've typed in Microsoft. And go down below the chart to the Charting tab and select here a weekly, and let's set that to 3 years, and then create chart. What you've done by doing this is set your default chart to a 3-year weekly chart. Now when I do that market scan and review the charts that come up from the market scan, they will be a weekly 3-year chart. So I'm setting this market scan up again. American stock sentiment score greater than 55, gain loss greater than 5% over the last 10 days, and price under $25. I'm going to set the number of trades to 1,000. I could add in other filters as well. For example, I could use the stock pays dividends filter, yield greater than a certain percent. Let's do that. Let's say stock pays a dividend greater than 3%. That, of course, is going to be historical dividend. Doesn't mean they are guaranteed to pay that in the future. And there we have 25 stocks that met those criteria. My last step is to look at the charts and see if these stocks are just breaking out of sideways trading or if they've been going up for some time. So here we have a stock that's been in a sideways pattern for a little while. It has some resistance here at about 330. Not a great chart, pretty good. What I don't want is stocks that have been going up for some time already. TK Tankers, if you've been watching the market closely, you'll know that the shipping stocks have been doing well lately. This one looks another shipping stock. I can click on it and get a little bit better view of the chart by doing that. So that's the process I do, is go through the process of scanning the market and then viewing the charts. And once you see a chart that you think looks okay, you might want to blow it up, take a look at the pattern. Is it breaking through resistance? Is it breaking from low price volatility? All those sorts of things are topics that I teach in any of my courses. But if you know how to read charts, then you probably know how to do some of this already. And as I cycle through the charts, you can see I'm going through 10 charts per page because I am in gallery view. Speeds up the research process. And as I go through, I'll see something that I like. If I like it, I can click on it, do my risk management All of those things, again, taught in the investor course or even in the active trader course, which is available from Stockscores.com. All right, let's get into this week's analysis of the market. Now, last week we had a short-term chart with support at 178, and the concern was, does the market break through 178? If it does, it's probably headed toward the 174 mark, which is the bottom of the upward sloping channel. The market liked what Ben Bernanke and the U.S. Federal Reserve had to say this week. We got a nearly 300-point rally on Wednesday following the news from the Fed. And the market is now stalled at resistance, at horizontal resistance, just under 182. My expectation is the market moves up towards the top of the channel. The buyers are in control of this market, but realize that the market's going to be pretty quiet between now and the first few days of January, simply because it is year-end, the holidays, that sort of thing. So we can't trust the market's opinion a whole lot. One thing to keep in mind, however, is that the first 5 days of the new trading year, in other words, the first 5 days of 2014, if the market is up in those first 5 days, that's a strong indication that the market will be up through the year. It's the January effect. It's something that happens virtually every year. The first week of the year tells us a lot about how the market will perform, so keep an eye on that. The TSX bounced off of its upward trend line. I've drawn that in green. Did it just as it was supposed to do. It is now rallied up to resistance at the red line. I think the Canadian market's going to stall and go sideways into year-end here. Not unreasonable given what's happened over the last couple of weeks, but the bias remains up. We are in a bullish trend for the Canadian market. The the Treasury bond market broke a short-term downward trend line, and that tells me that Treasuries are likely to move higher in the near term. Not considerably higher. There's some resistance that's not all that far away, but remember that as bond prices go up, yields go down, interest rates go down, and so if you are thinking about getting a mortgage, you might want to wait a little bit here because the signs are there that interest rates could drop a little bit in the short term. Now, this is a very short-term indication. If we break down below the green line, that means bond prices are going to fall farther, and that means interest rates are going up. China market has pulled back to support. I expect the Chinese ETF will bounce next week, and that would actually be a good thing for overall stock market because, of course, we're always looking to what's going on in the big market of China. So expect a bounce there, but until it happens, don't get too optimistic. Emerging markets at some support. They should also hold their support level, and that's something important, but not considerable upside here. I call this chart neutral. The US dollar is flirting with its downward trend line. Hasn't broken it yet. I've drawn that in red, but we do see a rising bottom having formed. You'll notice the green horizontal lines are rising from left to right on this chart. That means the buyers are getting a little bit more optimistic about the US dollar. And if we break that downward trend line, that could be negative for many commodities and emerging markets for that matter. Gold is at long-term support. It is in a downward trend. We have to remain bearish here. And if we break down below that green line, expect further bearishness. My sense is that in the short term, we'll probably hold that support level and make a little rally up to the downward trend line, but I'm generally pessimistic on gold looking out. The oil market had a pretty good sell-off through October, November as tensions in the Middle East quieted, and we've got down to support, bounced off of support. Now we're breaking from a rising bottom. I think the market is looking toward an improving global economy, and that is, of course, good for oil. I don't see considerable upside potential for oil, but certainly stability has come back to the oil market. The VIX tried to rally a little bit last week, of course, when the Fed did their tapering. For some reason, the market liked that, and I guess it's an indication that the economy is getting better. The VIX sold off sharply on Wednesday, and as I've said many times over the last few months, fear is not a factor in the market. So my long-term outlooks for the stock markets, bullish on both the US and Canadian market, short-term neutral simply because we had a pretty good rally this week after Wednesday, and I think we're going to catch a breather in the short term. Gold bearish. In the short term, it's got some support where it will probably trend sideways for a little while, maybe even bounce higher, so that's why I put a neutral rating there. Neutral on oil in the longer term, but in the short term, we're getting some signs that maybe we'll get a little bit of a rally over the next week or two. Stocks have held support and the buyers remain in control of stocks. Gold is threatening a long-term area of support, while oil is breaking up from a rising bottom, indicating more strength in the short term is likely. Fear is not a factor in the stock market. Have a great week and trade well.